G'day everyone, welcome back to Pete's Investing. Today is May the 30th, 2023. This is the nat gas price update. You can see here we've got a neutral position on the weekly and the daily in terms of the general trend, which means uncertainty in which way to go, but I'll explain potentials in the lower time frames in the next few minutes. So first let's look at the weekly trend. What this indicator down here indicates is the trend combining the triple moving average of the price chart. That's 3, 5 and 60 with the moving average 5 and 50 of the CCI 150. If they're aligned, it shows us a bearish or a bullish indicator. In this case they differ, so it's giving us a neutral positioning at the moment. So primarily avoid trading at the moment on the lower time frames according to the weekly. The daily has likewise just broken down into a neutral position as well after a very short period of long trading. Again, long trading on the hourly if you're going to trade this primarily. So again, the daily is showing a neutral. And what a few more things to show you here. What I've got first off is, if I zoom in, I've got the support here at 2064. And that's a key support area. It's bounced off that number of times already. And a key resistance at 305. It's bounced off that once and it's now sitting in this minor resistance area at 250. Now we've got a potential long positioning happening if this divergence plays out. And for this divergence to work, we need to see it break, the CCI continue to go to the upside on the CCI, but we also need to see the price break above this descending trend line, this dotted line here. If it breaks above that, and especially if it breaks above this resistance, we're going to see it initially probably hit this target area between the 23% and the 38% Fibonacci retracement between that high and that low, and that's the low level there at 23% is 325, and the high level there is at 396. So that's our initial target area if it breaks above this resistance. Of course, it could go higher, but I always use the initial Fibonacci range as a target area for potential. I don't get too ambitious to go any higher, but of course it could go higher. Now on the negative, if it breaks to the downside, let me just zoom in a bit. I've done a Fibonacci extension between that high and that little retracement, and so the initial target area would be that 23% to the 38% extension level, which is at 191 at the high level there, down to about the 121. So if it breaks below this support area at 206, that'll be our bearish outlook. So again, we're sort of stuck in this range for a number of months now. So we need to see it break above or below to be more confident about the initial target ranges. Now, I'm quietly confident of a bullish outcome, because if I drill out, you can see here we've got we had a bearish outlook on the CCI over those months versus a bullish trend on the price chart. Now this was a longer term playing out of this CCI, because you can see there the CCI kept falling, and likewise the price kept falling from there, and eventually broke to the downside of that range. So the way you work that, if you're new to the channel, we look at playing the divergence from that high there down to that lowest candle in that divergence range. So as soon as it broke below there, the price did bounce up to the upside slightly. So that's where you've got to be a bit cautious, but also patient. Notice the CCI kept falling, and our initial target would have been somewhere in the range of, again using the closest Fibonacci range, so you would have gone to that high there. So it would have been somewhere in the range between the 61% to the 78%, and you can see there it hit that range once it broke out of that channel. The other divergence that worked out was this bearish divergence back here with that bullish divergence on the price chart, and the same outcome would have happened. So again, drawing a channel between that range there down to that range within that channel. You can see they're broken. The initial target area would have been the 38% to the 50%, and it hit it there. So again, I'm quietly confident of this breaking to the upside. We'll just see how it goes in the coming days and possibly weeks. It's been a number of weeks now since it's been sitting in this range. Lastly, let's look at the hourly. again, we've got a very slight bearish outlook on the hourly chart. You can see there it's broke down and it hit this range initially. So what we need to see it now is play it on the daily divergence, and for this to correct to the upside as well. Lastly, you see up here we've got a bullish backtesting program which I've been running, and it had a couple of drawdown effects. Now you would avoid trading that on the hourly based on the weekly and daily trend. So again, looking at that as an example, there was no bullish trend on the daily, nor was there any bullish trends on our weekly indicator. So again, you would have avoided with those drawdowns. So always pay attention to the weekly and daily trends when trading on the lower time frames. So to understand how to trade this and other trading strategies, subscribe to my Patreon page for exclusive access to this and other trading strategies, but also we do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.